Hi folks, it's Aidan CryptoBurb speaking. Welcome to today's Excellent Friday webinar. Well, I'm really curious how it actually develops because this is a big turnaround in the market. This is a big follow through, big confirmation, excellent rump on the stocks rallying, and Bitcoin actually holding back a little bit, as it trades differently than the stocks. It rarely ever happens. It typically happens around the Bitcoin bottoms after corrections. However, it is what it is as we got the FOMC rate hiking pause. We're going to investigate deeper into the charts and see, because the charts are telling us the true story. Well, let's figure it out how it goes for this week. If you're ready to hear this and more, make sure to stay tuned. We're going there right in a second. How is it going, everybody? Again, this is Aidan CryptoBurb speaking. CMT, chart market technician. Still, I'm feeling a little bit lonely in my own country, right? Because there are not many CMTs. To the best of my knowledge, up to date, I'm still the only one holding this title, and this sucks because I would love so much more to have so many other CMTs surrounding here. Residing here in Poland, in Portugal, in Europe. This is definitely something that gives us leverage, that gives us better timing. If you are a fundamental investor and your only choice is to basically not time the market, but rather focus on buy and hold strategy and maybe reshuffle a little bit of your portfolio allocation, that is the only thing that would matter for fundamental analysts and fundamental traders. What matters, though, is that in volatile experiments, in volatile markets, in volatile conditions, just like cryptocurrencies, when Bitcoin can dump 50% in one day, just like it had in the past, the fundamental investing doesn't protect you against massive dumps, right? So it may happen that your portfolio fluctuates as a whole roller coaster, and your job as a trader, as an investor, as a technical trader, to time the market well and be in the market only when the time is right and be out of the market when the time is wrong, right? This is different than what the fundamental traders do, what the fundamental analysts do. And this gives the superiority of technical analysis to be up to date, to be right at the market and right on the money. Ladies and gentlemen, this has been definitely a very interesting week, very powerful breakout to the upside on the stocks. We're going to dig deeper into the charts right in a second. Before we do so, make sure that if you're watching that on YouTube, hit the subscribe button, smash the notification bells so that you stay notified every time we get the new video out. And there's a new podcast episode coming after a long period. The next show podcast is coming back. This is pretty exciting. If you're watching that again on YouTube, on Twitter, make sure you drop some questions if you'll have some questions along the way. Let's give it a go. Let's see what is cooking behind the scenes. With the market summary, what is going on with the market summary? Let's have a look. The major markets are kind of like a 50-50. Some of those are in green, the others are in the red. So it's a little bit of a, I should say, back and forth 50-50 situation. Major indices are, in a similar condition, right? Similar condition, 50-50 split. However, S&P 500, all the S&P 500 sectors less the materials, however, it's 0.001 on the negative side. So it's pretty much something that we could ignore. Here, all the markets are in the green, right? After powerful rallies. So both the defensive stocks and the offensive stocks are rallying. This tells me that S&P 500 is the king right now, along and led by the technology. Super interesting times. Let's give a more detailed look, right? So what's happening on the Dow Industrials? That gives us a good understanding about what's going on with the whole industry. That gives us full industrial average discounts, all the important available necessary information to give us a prompt message of what the market is telling us itself. We are looking at the potential breakout, right? This very case here, we're breaking above the 34,300 points. This has been the major magnet resistance in a way, right? Of course, the Dow Jones, is something that is more supposed to be here as an average rather than a tradable asset. I would trade it. I do not. I recommend so that you basically look at it as a major trend indicator, right? So whenever whenever there is a significant demand inflow, whenever there is a significant push, it gives you information about the trend and about the directions for the overall industry, right? So what it does, again, we've been chopping, of course, heavily for the past, 6-7 months, or even more, right? Ever since 2023 started, and even slightly before that. We've been chopping at around somewhere between 31,500 to maybe a little bit up, but maybe a little bit down, toward mid 34 thousands, right? So what it tells us is, again, this has been a choppy, sloppy range. It's been slow. However, the market is sloping up slightly over 200-day basis, right? So 200-day trend, which directly tells you about the bull market or the bear market conditions. It goes down to the bear market and it goes up in the bull market, right? It is ticking up. This is a positive note. It's definitely having some mean reversion completion here from earlier this year, followed by a significant surge, right? On top of that, what is relevant, I think, that we got to see significant, powerful breakout also on the Dow Jones Transportation on the bottom, right? So the Dow theory, basically the averages must confirm, the shadow must confirm themselves, is intact and in play here. This gives the trend validity. The trend is healthy, right? And hence would have better chances to continue the direction taken. So I would say it's a positive thing. Then S&P 500, I kept notifying everybody actively on Twitter along with the breakouts, and the breakout that happened around 4,200. See how relevant that was. So many times in the past this year, and we got the rejection. We got to reject the 4,200s. Boom, boom, boom. 41.95, 41.69, 41.86. All those points acted as a strong resistance around the round magical number. We love round numbers. We often tend to apply this magical thinking where we don't necessarily understand why this number would be relevant. However, because it's a round number, it's easy to memorize, we would assign special magical value to it, right? So magical thinking is an actual bias where you do not focus to understand the process that takes it to a result, but rather kind of like assume that something happens because this is a fixed rule, right? Such as buy support and sell the resistance. Nobody is given ever such rules. In fact, buying over the broken resistance rather than selling it is what generates the best returns, right? So it kind of like against the contrary belief. However, it's more profitable. So I would kindly recommend to everybody so that you do not rely on magical thinking. And 4,200 is a magical number, right? In the eyes of the people, not so much because I say so, but because we love round numbers. The round numbers as in 4,200 or 4,000, 5,000, 10,000, 100,000, those are all round numbers. And round numbers have a special place in technical analysis, like I said, because they're easy to memorize. They're easy to remember. And it's so much easier to remember 4,200 than 4176.87, right? I already forgot what I said. So those round numbers, because they are easy to wrap our minds around it, because they're easy points to memorize on the map, on the chart, we tend to assign special value to it. And because of that, whenever the price gets to the special value in our mind, we tend to act irrationally and just sell, or buy, regardless of what we really should be doing, right? So that's pretty interesting. And that's what traders do. And because of the technical analysis works, this is a technical analysis, beauty intact and in play. Regardless, the new high close over 4,200 came in last month. And ever since that scene, we have really given a whole magnitude of a move up 4,200 all the way to over 4,500 almost, right? We're somewhere midway through 45.50. This is a very powerful breakout. See what it happens, right? When the price breaks out, it's not a slow, choppy kind of like a movement, right? It is an actual accelerated movement. When it just jumps outside of a breakout, it gains on the momentum immediately and it rallies. This is a powerful rally. This is a powerful trend breakout over the yearly highs, right? So not only year-to-date performance beaten, it is also 52-week highs. This is incredible power, very, very strong movement to the upside by the S&P 500. Stocks are bullish, and this is just to remind to everybody that we are talking about the most bullish year on the record. If I am to find already Well, the actual cheat sheet, for the S&P 500, then I would recommend so that you actually have a look at what Jeff Hirsch would share. And Jeff Hirsch would share, well, is an excellent seasonality proficient and professional. And he's sharing basically that over 84 years, only 1 year was losing in the pre-election years. So 2023, just like 2019, just like 2015, 2011, happens to be a pre-election years. And if you go ahead and see what happened with Bitcoin and other stock markets, again, in those pre-election years, those tend to be very strong performing years. So not something that I would definitely reject. While S&P 500 and stocks on average, total aggregated returns would give you maybe 10% on average a year. This year gives you 20%, right? So average, Nasdaq is 30%. So those are the gifts from the market. Those are the gifts from the God, if you will, right? Double the average returns. This is a good market to be in. And S&P 500 is no different. It also gains a lot of confirmation from the relative strength ratio, right? Ever since the 2022 ended and 2023 started, we're looking at this immediate push to the upside with a confirmed follow through an upward trend, right? The low made, the high made, the lower high low and higher high. This is a valid trend developing. On top of that, you could argue there is just maybe a little bit of a inverse head and shoulders, kind of like a composition pattern formation. Who knows? Maybe it will act somehow, right, and make some deeper and further validation. Long story short, what I would recommend so that you see and have a look at is that the XLY versus XLP gives you a good, clear picture and understanding what is going on the risk side, on the risk off side, right? So risk on, risk off environment. And whenever XLY chapter outperforms the XLP, this ratio, this relative strength ratio, is going to incline. So ever since 2023 started, the risk of offensive stocks, the risk appetite, the risk investors are actually outperforming the defensive stocks, right? And this had been exactly the opposite case in 2022 as a whole. So 2022 was the year of the midterm bear market, and the preferred solution was the safe one, was the basic one, was the consumer staples, right? And anything that regarded risk, also involving cryptocurrencies, was rejected. And ever since 2023 started, this had rotated 180 degrees. The market has performed very strongly so far. And this is just a confirmation on the relative strength study, the relative strength momentum study, that this market is very strong. Besides, the energy is tumbling. The energy is actually, again, just trying to find its way and find its position. However, what's relevant, again, that the XLE versus SPX, the relative strength ratio is declining, is bearish. So this often precedes the prices, right? So what it tells you, it often has certain predictive value assigned to it. And predictive value would mean that the price, that the relative strength movements when one asset underperforms another, such as here XLE energy sector, underperforms the S&P 500 benchmark, and quite aggressively, right? This often precedes the price movements. So we continue to see the negative downward movement on the XLE SPX relative strength ratio, while the price still maintains this kind of like a position within the range and choppy range. So arguably, again, we got to see and confirm new lows some time ago on the relative strength index. On the relative strength of the energy sector versus S&P 500. While no new lows just been made on the price yet. So this gives you, again, this disparity, this discrepancy gives you a potential prediction here, right? Embedded in this very chart. If the relative strength is declining, this tells you that the energy sector continues to weaken against the S&P 500. And if it does so, this means that the trend is getting weaker, right? And if the trend's getting weaker, this gives you better chances for a reversal. So just maybe we're looking at this major yearly pattern reversal. And if that happens, which is something that I think is happening, then this means more disposable income in your pockets, more money to invest in to deploy on the financial markets, on the stocks, risk assets, gives you more confidence, gives you better liquidity, gives you better more room to invest in Bitcoin as well, right? Miners are going to be more profitable because the energy prices are going to decline. So that seems to be the case, right? And again, relative strength ratio, when you compare the underperformance and outperformance of one asset over another, it relies on the momentum principle, where outperforming assets will continue to outperform and the underperforming assets will continue to underperform. Hence, you have a better, clear picture that the energy continuously underperforms versus the S&P 500 benchmark, increasing the likelihood that we are actually looking at the major yearly pattern reversal, right? While this is of course uncertain, we don't know the future, there's no one who can know the future, I would argue that this gives us a clear indication that it's very likely that we have shifted, that you're watching a major energy sector reversal, right? Again, of course, we don't know what's going to happen with the war, so there are some unpredictable events to it. Regardless, technical analysis tells you that we have shifted, right? We are not performing over the 200-day moving average. The trend has been lost. It's on the bearish side of the trend, and the trend has slowed down significantly, and it's outperforming. It's not a preferred choice anymore. This gives you a better entry for a potential short if you're shorting the ETFs, or prepare yourself for better rallies for cryptos again. Then moving on to the dollar. If we have a look at the dollar, well, then basically dollar is a victim of its own success. If you look at it this way, right? A victim of its own success is here. We got this powerful breakout, and the dollar peaked somewhere. It was, I think, June 2022, midway through 2022. The dollar peaked, was very, very significant rally, of course, off the lows, following the monetary tightening decisions, and we have just got the first pause on the rate hikes here, right? So arguably, we're looking at this overall sloppy chop here. The congestion of the candlesticks tells you there might be a little bit of a bottom forming. However, it's not strong, right? This is not an immediate spike. Remember, those are monthly candles. So what's happening for the entire month is printed as a one candle in here. So arguably, again, we are in the sideways pattern. It doesn't look too much like an accumulation. There is much more red than white. This tells me more that this is some sort of like a redistribution, if I were to guess, right? Especially that when the Fed goes back to the monetary monetary easing and printing money, that this weakens the dollar as the supply increases. So super interesting times, right? Before we jump into the Bitcoin, I'd love to confirm with you, if you're watching that on YouTube, again, make sure you hit the subscribe button, smash the notification bells, hit the like as well if you're there. Drop some comments if you have any questions. I will gladly answer them if that regards trading, investing, technical analysis, anything else. Maybe you want to talk about my awesome, beautiful hairline, right, and how my hair looks today. So you never know. Drop any questions that you guys have, and I'll be honored to answer them. And by the way, congratulations if you're watching that, because basically you're giving yourself a chance. You're giving yourself a chance to win, right? Being a winner means being persistent, and being persistent means being here, no matter what happens, regardless that everybody else would drop out, right? So it's very easy to resign off the crypto markets, resign and quit the crypto trading whenever the market dumps, right? It's so much easier to rally in, to FOMO in whenever the market pumps. So arguably, again, the fact that you're here despite the market being down on the crypto side, but being strongly to the upside oriented, on the stock side, gives you, I think, edge. You are earlier than the vast majority of the market participants who are going to FOMO in when Bitcoin breaks new all-time highs. Probably next year. The year is very good for 2023. The overall expectation for 2023 and 2024 is the strong, severe performing bull market. The odds are on our side, right? So if you're bullish, if you want to make money, you're in the right place and in the right time. Congratulations to you. So let's have a look on what's going on with Bitcoin, right? So Bitcoin is definitely in its own bull market again. And how do I know that? Is this my opinion? No, fuck my opinions. My opinions can be always wrong 24/7. I made so many wrong decisions, so many mistakes, and so many wrong predictions. I'm not predicting anything anymore. Fuck predictions. I'm not doing that anymore. I'm relying on the focusing on the facts. The facts are on the left-hand side of the chart. Opinions are on the right-hand side. This is guessing. This is relying on facts and numbers. Relying on facts and numbers is profitable. And this inclining trend inclines only when this is a bull market. When it's a bear market, it continues to decline because guess what? It is a native trend. It is a dominant tendency of the market. This is a 200 days of price action averaged out. And it's impossible for the market to increase on average for the 3 months straight, day in, day out, on average, by accident or by coincidence. It is impossible, right? So if this is not coincidental, then means it's directional. And guess what? This is what we call a trend. This is a primary trend. This is a primary bull market. It's an early phase. It's an very early phase of the bull market. If that bottom was $3,000 of 2018, I would say that this is somewhere around 5,000-6,000, just like it did at that time, right? To give you a little bit of a comparison. So 200-day moving average support. This 200-day moving average is a reliable, fair, long-term price of Bitcoin that is fair, that is good price buying opportunity. So arguably, again, 23,700s, 24,000s, we love those raw numbers. I would say that this is a good buying opportunity for anybody who's missed out the whole rallies, who missed out the 19,000, who missed out 16,000, and still want to buy in. So instead of waiting for $60,000 again, perhaps you may consider entering at a good value priced by the market itself. This is a fair long-term price to potentially deploy a little bit of capital if that's something that interests you, just maybe, right? So I would consider for sure at least having a look at it. Of course, we don't know the future, just maybe with all the FAT, the market tanks and you're going to see some dump and slump below $22,000 or $23,000. Who knows? Regardless, what it tells you is that 23,784, 24,000 is a benchmark. And those benchmarks can serve as anchors. And as we anchor in, there comes an anchoring effect where we prioritize those levels in our minds. And because this happens, we again place this magical value at this specific price, and that's exactly the reason why whenever there is a moving average, the prices often bounce this moving average, right? Because the layers, this comes with order clustering, the buying orders come in from the anchoring effect. The traders are bidding those kind of like, again, those numbers right around the moving average. And as a result, it's meeting the support, and the support is formed, and the price action can find a little bit of a rebound there. So again, we are locally, ever since picking out in April, after 100% rally of the 15,500s all the way to 31,000, we are actually looking at this local correction in the descending channel, in a downtrending medium-term correction that takes typically anywhere between 3 weeks and 3 months. Arguably, it's not going to last forever, especially that we got very tight and very close and very near the true long-term price value of Bitcoin, right? So if gun to my head, if anybody tells me or asks me what is a good buying price, I'd say anywhere between 23,000, 24,000 should be a good, reliable buying price. Of course, it's going to depend upon your risk profile, risk preference. Some people hate risk. The other people love spending money endlessly in the casino. And that's upon you to decide. However, relying on the facts, the market is telling you that this 23,784 is the right place to enter potentially, right? So I would say that just something that you may consider. At times I wish my master's wasn't as dense, because all of this hair just kicks in my nose and it just irritates my nose so much. Sorry about that. We have a question. Cześć. I do have a question. How do you feel about potential so-called melt up on the markets with S&P 500 hitting likes of 6,000? So 6,000 is less than 50% up from here. I'd say it's possible, right? Probably I wouldn't expect that in this year, maybe next year, maybe 2025. Overall, we live in an inflationary world, right? We live in a condition where money is being printed much more than taken away from the circulating supply. So because of that, the prices are inflated. It inflates the prices. The more money in circulation, the more inflation, the higher the prices, right? So I see no reason why all of a sudden the trend that had been lasting for hundreds of years, over 100 of years, and over inclines on continuous incline over the stock market would change, right? So I'd say there are very strong reasons to believe that the melt up on the S&P 500 and hitting 6,000 points is somehow on the horizon. I wouldn't predict, or I wouldn't say anything that it's coming this week or next year or maybe in 2026. Who knows? All that we know is that 2023 is a pre-election year. This happens to double the average return for S&P 500 and give an average 30% Nasdaq return on the pre-election years, and only once out of 84 years this has been a different case. Otherwise, 2024 is the election year, and the election years are fair extension of the super bullish recoveries after the midterm bear markets. So midterm bear markets 2022, 2018, 2014, 20 and 10, all those kind of like, again, inflation sensitive, bear market sensitive stocks are going and assets are going to suffer in the midterm bear markets and very well recover in the pre-election bull markets that follow right after. And beyond that, probably have some decent extension into the election years. Otherwise, if you think about that, elections work because politicians give away money, right? So it means it is inflationary. Elections are inflationary. No one will choose politicians if they fuck up the economy, right? So they have to prove to the people, to the electorate, to the people who will potentially re-elect them that, hey, listen, look at us, we just fixed the market, right? Yeah. Very good question. I love the question. Just that. I don't know if you're Polish or not. Very good. Great questions. Keep them coming. Okay, let's try to get some slow close up here, right? So I would say again, 23, 24,000. If you get it, that's a good buying region, I'd say, right? And fundamental analysts would not be able to tell you that exactly because they have no idea. They don't look at the charts like that, right? So this is a clear edge and distinction that you as technical traders have access to, and the price chart is supposed to tell you the whole story. You don't need to watch 50 different economic indicators. You don't need to watch the weather. You don't need to watch what's happening in the government. All you have to watch is open the Bitcoin chart because it tells you the whole story. It discounts all available information, less some manipulations, less some insider trading, and etc. Right? Most of the time, it efficiently discounts the information, and that's the beauty of technical analysis. The price discounts everything. The market discounts everything. You don't need to watch the weather. You don't need to watch the TV show. You don't need to watch the everyday. You read the newspaper. You don't need to watch 50 different economic indicators to know what's going on with Bitcoin. And you don't get that outside of technical analysis. So if we are to have a closer look at what's going on the systematic side, this is my current time frame trailer and the high time frame trailer system. This is a trend following system that I have, that I trade. It means that it follows the trend. So if the trend is up, I'm going to be position myself on the 12-hour time frame in the upwards direction. However, on the daily time frame, it's been down, right? Lately, it's been for the past month. It has been trending down on average. So this is a local downtrend over the past month. And a little bit of a medium-term time frame closer to the one that I trade on the 12-hour candles or the bars. I'd say again that we are still not out of the woods. The main critical threshold that I want to see play out is breaking above 27,000s or at least 26,800s. This would give a double validation, right? This would give a double validation. So if we go to the roots and enable the baseline, the main sensitive adaptive moving average of the Burpigator Pro, you can tell that it's still moving down, right? So the 20-day trend is still down. So for this reason, those are not the good buying conditions. The buying conditions come in when the trend is up, just like it was here. This is when the trigger signal triggers, right? This is where the signal triggers here as well. When the trend is up, you buy the direction of the trend. This is the core of the trend following. So here, even though there might be a little bit of a breakout outside of regular volatility that is defined by the trailers here, the trend is down. So we would probably not flash the bull signal, the buy signal for me just yet. So I'm waiting patiently. I'm waiting for the trend to curve up, and when it curves up and there's a significant breakout above 26,800s or 26,200s at least, I would say and argue that this is a good validation for me entering probably with middle six figures into the position trade like that for a couple of weeks. So again, the conditions are still bearish, neutral to bearish. The market is indecisive. Luckily, it's moving decently today. What is it? 2.56% on the upside today. To the upside, it's a good movement. However, it still requires some more curving up. The trend is down on average. This is not something that I would rush to trade against, right? The trend is downwards oriented. Let the trend curve up. Let the main resistance is defined by the volatility be broken out to the upside. And that's what I would enter. I would definitely notify everybody transparent, just like I always do. And this is the case, everybody. I really appreciate your time tuning in. I see some question again, I think, or is it? Hi, Brep, always great analysis. Thank you so much. Although it seems that chart is quiet and not many people live, your analysis is always useful. Thank you so much. Your kind words are great. As a CMT level 1, I appreciate your insights and logic analysis. Welcome. I definitely congratulate you on taking the CMT path. Charter market technician is game changer, is a life changer for sure. It opens up your eyes and teaches you how to rely on the facts and reject your opinions. It taught me so much about myself, about how I reacted to the news, how I overreacted to the situations, and that not having a systematic approach leads you to losses. So technical analysis works. It's beautiful. It has the longest track record for any investment proven over 214 years of existence. The momentum techniques, momentum investings that are the core root of technical analysis work and help you perform better. So this is correct. Well done. I congratulate you again on taking the CMT level 1. I kindly recommend that to everybody. We should have more CMTs. We should have more people who understand technical analysis, and that technical trading can be profitable. It is profitable if you use it well. Otherwise, you can always say that if you, on your math test, imagine you learn mathematics and you write that 2 + 2 = 5, then you fail, then most of the people would say, okay, fuck this, maths don't work, right? It's bullshit, it doesn't work, right? I studied so hard and it doesn't work. Well, if you cannot do maths will not work, right? So same way, technical analysis, if one cannot do it properly, it's not going to work for them. Regardless, all the best love. Happy Father's Day from Queen. Thanks for everything, just like that. Till the next time. That's it. David, thank you, Bert. David Jenner, congratulations again. You're watching that on. If you're watching that on YouTube, make sure you hit the subscribe button, stay notified with the bells, and hit the like if you like this webinar. And again, drop some questions. I'll do my best to come in right after this one with my team and answer some of those. Everybody, before you go, remember that you can get our premium trading calls for free, and you need to register at this very link, theburbness.com/bybit. If you go to theburbness.com/bybit, you can register and immediately unlock free trading calls. Those are premium trading calls. Those are calls that are profitable. Those are calls that are valid. Those are back-tested, reliable, proven to work, and you can make money, and it costs 0. go ahead to bermudas.com/bybit. Those are our official partners. Congratulations again. Have a great weekend. Stay safe. God bless you all. Bye bye.